What's up, millennials? If you would like to invest in a nerdy company, well, I've got the company for you. Today we're going to take a look at the valuation of a company called Nerdy. And this is a digital learning company that is going to be acquired by the SPAC that's currently trading under the ticker symbol PACE. Before we start, as always, I have not done extensive research about this company just yet. We're only going to take a look at the valuation of this company. Secondly, don't trust me, verify me, always check what I'm doing because I'm not a financial expert, I'm not a financial advisor. And lastly, if you would like to have access to the sheet that I'm going to be using today, well, then please go to nesami.com/discord so you can join our Discord, which is free, if you just leave your name and leave your email address. Before we hop into the valuation, let's very briefly talk about what kind of company we are currently looking at. This company, Nerdy, was founded in 2007 by the current CEO Chuck Hohn, and it is a digital learning platform. They provide personalized learning via artificial intelligence, and as we can see on this page of the investor presentation, they already have a few products, and their flagship business is Varsity Tutors. They already provided 4.7 million hours in tutoring, online tutoring, and they already covered more than 3,000 subjects as well. This company, Nerdy, is a company that already has revenue, so that's pretty good. And, well, with regards to the merger date, we don't know that for sure just yet, but it's going to be somewhere in Q2 of this year. Then with regards to the pro forma valuation, we can see the following. As always, or as almost always, the SPAC trades at $10 per share, or started trading at that price rather, and they're going to have 170.2 million shares outstanding, as we can see in the investor presentation. So if we take that number, if we take that price per share of $10, we multiply that by the amount of outstanding shares after the merger, 170.2 million, we arrive at a pro forma market cap or an equity value of about $1.7 billion. Then we can also see that they're going to have $297 million in cash on their balance sheet. So that means we can simply take this equity value or market cap, we can subtract the amount of net cash, and then we're going to arrive at an enterprise value of, in this case, $1.4 billion. So that means that based on a price per share of $10 per share, Nerdy would be worth $1.4 billion. However, if we go into trading view, we can see that they're currently trading at $10.77. So that's the number that I put over here in my Excel sheet. And that means that we can now see that this company at a price of $10.77, it has a pro forma market cap of a little bit more than 1.8 billion, and the current pro forma enterprise value is a little bit more than $1.5 billion. Then now we're going to take a look at the fair enterprise value of Nerdy. For that, we're going to need two numbers. First of all, we're going to need either a revenue number or an EBITDA number, and then we're also going to need a certain multiple to apply to that revenue or EBITDA. Let's first talk about that revenue for a second, because we're going to be working with the revenue numbers for this company, Nerdy. And we're going to be taking a look at the numbers of 2022. Very well. So here we can see that this company already has quite a lot, or has quite some revenue, $72 million in 2018. Then it ramped up in 2019 to 91 million, in 2020 106 million, 2021 138 they expect to have, and then in 2022, which is the year we are going to be looking at, $198 million, which is also the number that I put over here in my Excel sheet, because that's the number we are going to be working with. And then we're also going to need a fair multiple for this company. And for that, we're actually going to be taking a look at this page over here, which has the valuation benchmarking. Basically meaning that we are going to be taking a look at a comparison of Nerdy's multiple versus other companies out there in the same space as Nerdy as well, or at least similar companies as we can call it. So very well, they are looking at other companies and we're going to take a look at them right now, but they say, okay, if you look at our own EV to sales ratio in 2022, it is 7.1x. Very well. Well, if you take a look at these companies all over here, so you have Chegg, Fiverr, Airbnb, DoorDash, Etsy, Match Group, and Teladoc, then you have an average multiple of 16.9 across all of these companies. By the way, if you want to learn a little bit more about the multiples and all that kind of stuff, maybe check out the SPAC guide that I posted on YouTube last Friday. It's like a complete guide of almost 1 hour with all the terms that I'm using right now and the entire explanation of the method that I'm currently using. So that might be useful to you as well. Okay, so with regards to these multiples, we can see that these are fairly high multiples compared to Nerdy. And they are also looking at companies that don't necessarily have to do exactly with the business model of Nerdy itself, right? Because if you're taking a look, for example, they're also including Airbnb, they're including DoorDash, Etsy, Teladoc. These companies, I'm not entirely sure why they are included in this valuation benchmarking, to be very honest with you. I don't even see companies like 2U in here. And 2U, just for reference, according to Yahoo Finance, has an EV to sales ratio of 4.6 in 2021. So in 2022, that's going to be even lower than that. So it's quite unfortunate that they just came up with these multiples, which are relatively high in my opinion. So I'm going to try to be a little bit more conservative versus these multiples. So they say the average multiple is 16.9. So you could say, well, maybe a fair range would be like 15x on the low end and 18x on the high end, for example. But I think that's rather on the high end. So what I think is maybe a little bit more fair is to look at a lower multiple range of maybe 12 to 16x. And is almost basically based on the multiple of Chegg, which is a relatively similar company. Especially if you take a look at all of these companies versus Chegg. Chegg is the company that probably is most similar to Nerdy itself. So I think that a multiple of Chegg could be actually a good multiple to use. So I've decided to come up with a range of multiples from 12x on the low end, 16x on the high end. So then we have our two numbers. We have our revenue and we have our revenue multiple range. So now we can simply go on and do the calculations. Let's make this a little bit bigger. Okay, so we have these two numbers, and let's actually pull up a calculator just to prove everything is working okay-ish. So we have $198 million in revenue in 2022, and we're going to apply these multiples of 12x on the low end and 16x on the high end. Let's first start with that low multiple of 12x. So we simply do 198 million multiplied by 12, and that is going to give us an enterprise value of almost $2.4 billion. And if it's correct, then the Excel sheet is going to say exactly the same thing. So yes, that's correct. Then let's go back to the the revenue of 2022, and let's now multiply it by 16x. That is going to give you an enterprise value of almost $3.2 billion, which is the number that should be over here. And yes, it is. Very well. So then we can also take this low enterprise value and this high enterprise value and simply look at the average of these two numbers, which is going to be this number, so almost $2.8 billion in enterprise value. But this is the enterprise value. We, of course, want to know the price per share, the fair price per share. Well, first of all, we have these enterprise values, but now we need to go, first of all, to a market cap, a fair market cap. How do we do that? Well, in the beginning of this video, we said that the difference between an enterprise value and a market cap or an equity value is the amount of net cash on their balance sheet. Well, very well. So we can simply take that enterprise value, we can add the amount of net cash, and then we're going to arrive at a fair market cap. So if we do that for all of these enterprise values, we're going to arrive at these market caps. For the low end, a little bit more than 2.6 billion. For the high end, almost 3.5 billion. And for the midpoint valuation, almost 3.1 billion. Okay, then the last step would be, to take these market caps and divide them by the amount of outstanding shares to arrive at a fair price per share. So if we do that, if we take these market caps, divide them by 170.2 million shares outstanding after the merger, you're going to arrive at these fair prices per share. So for the low end, $15.71. For the midpoint valuation, $18.03, and for the high valuation, $20.36. So according to these calculations, a fair price per share would be $18.03, which would mean that Nerdy is currently actually undervalued. However, don't trust me, verify me, check if everything what I'm doing is actually correct. And to also take into account, we have been taking a look at assumptions. I've taken a look at the revenue numbers, predicted revenue numbers of 2022. I've also applied a certain multiple range, a range of multiples for that revenue of 2022. Maybe you think that this revenue multiple is too high, maybe you think it's too low. So you can change that in your calculations as well to see what kind of valuation you come up with. With that being said, thank you very much for taking the time to watch this video, and I hope to see you in the next one. Bye bye!